Let's start with a number that should make you sit up straight. Every year, financial criminals steal hundreds of millions, sometimes billions of dollars from Canadians through fraud. This isn't just an abstract figure on a bank's balance sheet. It's real money taken from real people businesses. It's disrupting lives and eroding trust in systems we all depend on. The sheer scale can feel overwhelming, like a battle constantly being lost. But as threats get more sophisticated, so do the tools to fight them. A powerful new ally has entered the arena for Canadian banks: artificial intelligence, or AI. It offers a new kind of defense and a new way of thinking. So what exactly is AI? But a very smart, very fast learner. AI systems are complex computer programs built to sift through enormous amounts of information far beyond any human team's capacity. They're trained to recognize patterns, learn from experience, and make predictions from data. For a bank that processes millions of transactions every day, this is revolutionary. It's like a superpowered detective working 24/7, one that never sleeps, never gets tired, and spots hidden connections. That's the promise of AI in banking. Fighting fraud is just the beginning. AI is changing how banks decide on loans, making decisions faster and potentially fairer for more people. It's automating repetitive, behind-the-scenes work. Imagine trying to watch every single financial transaction happening in Canada at once. It would be impossible for a human. But for an AI system, this is exactly what it is built to do. The primary way AI helps banks stop fraud is by learning what is normal so it can instantly spot what is not. Each time you use your debit or credit card, you create a data point. The AI analyzes your personal spending habits, the stores you frequent, the cities you shop in, the average amount you spend, the time of day you are typically active. It builds a unique financial fingerprint just for you, a pattern of normal behavior that is constantly being updated with every transaction you make. When a transaction occurs that breaks this established pattern, the AI system immediately raises a red flag. For instance, your card is typically used for groceries in Toronto. Then it's suddenly used to buy thousands of dollars of electronics in a foreign country. At 3 a.m, the AI flags it as a high-risk event. This alert happens in real time, within milliseconds. The system can automatically decline the payment. This speed is the game changer. It can stop the crime before the money is ever lost. A stark contrast to discovering fraud weeks later on a paper statement. AI also connects seemingly unrelated pieces of information across a vast network of data. It looks beyond a single account to identify coordinated attacks. For example, stolen identities used to apply for dozens of credit cards from different banks. Similar sets of burner phones. Repeat IP addresses. A human analyst might miss the connection, but AI analyzes metadata across all applications to detect the pattern. By linking disparate events, AI can uncover an entire criminal network, allowing banks to shut it down and share intelligence to prevent similar attacks. This network-level view is crucial for fighting organized financial crime. This advanced detection protects the bank's bottom line and directly shields you, the customer. Fewer successful fraud attempts mean your money stays where it belongs, in your account. It reduces the stress and hassle of having to dispute fraudulent charges, cancel cards, restore your financial identity. Applying for a loan has traditionally been a slow, paper-heavy process. Banks would rely heavily on a few key metrics, most notably your credit score, to decide whether you were a worthy risk. This old model often left many people behind: new immigrants, young people without a long credit history, self-employed individuals with fluctuating incomes. AI is changing this dynamic, creating a more holistic and nuanced picture of an applicant's financial health. Instead of just looking at a credit score, AI models can analyze thousands of data points to assess creditworthiness in a more comprehensive way. This is a big deal for financial inclusion. These AI systems can securely analyze a wide range of alternative data. For example, consistency of your rent payments, your utility bill, history, cash flow patterns in your bank account. Someone with a thin credit file but a solid bill-paying history might finally get approved to buy a car or start a business. One immediate benefit for customers is speed. What once took days or even weeks of manual review can now be accomplished in minutes. When you apply for a loan online, an AI-powered system can instantly gather and analyze necessary information, run it through its risk model, and deliver a decision almost immediately. This speed is not just convenience, it can be critical for someone facing an emergency expense or a small business needing to seize a time-sensitive opportunity. Banks in Canada are increasingly using these automated systems to provide faster access to credit, improving the overall customer experience. However, this powerful technology comes with significant responsibility. The risk of bias is very real. If an AI model is trained on biased historical loan data, the AI can learn and even amplify those biases. Behind every customer transaction at a bank, there is a mountain of unseen work. This is the back office, a world of processing, verification, compliance checks. Traditionally, this work has been done by armies of people performing repetitive manual tasks. It's often slow, costly, and prone to human error. This is where AI and robotic process automation, or RPA, are stepping in, acting as a new digital workforce. These technologies handle high-volume, rule-based tasks with speed and accuracy, transforming the engine room of modern banking. One visible example is the rise of the chatbot. Many Canadian banks now offer AI-powered virtual assistants on websites and mobile apps. These chatbots work 24 hours a day, 7 days a week. They can answer questions about account balances, help you reset a password, provide branch hours, or book an appointment with a financial advisor. That frees human agents from repetitive queries, letting them focus on complex and emotionally nuanced customer issues that need a human touch. In less visible parts, intelligent document processing cuts time and errors, ensures compliance, and reduces risk. This isn't just a theoretical discussion. Major Canadian financial institutions are already deeply invested in artificial intelligence. The big five banks, RBC, TD, Scotiabank, BMO, CIBC, have all made substantial commitments to integrating AI into their core operations. They are not just buying off-the-shelf solutions. Many have established their own in-house AI research labs and innovation hubs, Borealis AI, Layer 6. These dedicated teams of data scientists, engineers, and ethicists are building custom AI tools tailored to Canadian customers and the unique regulatory environment. For example, AI-powered fraud detection systems have proven effective at reducing losses, analyzing millions of data points in real time to protect accounts. When you receive a text to confirm a suspicious transaction, you're seeing the front end of these systems. Banks are using AI to personalize digital banking, offer tailored advice, and recommend products. Automated decision engines speed approvals for personal loans and credit cards, giving Canadians faster access to funds. They don't replace humans for complex cases, but improve efficiency and accessibility for everyday credit. A thriving fintech ecosystem partners with large banks, accelerating AI adoption and benefiting consumers through better, safer, more convenient services. The integration of artificial intelligence into Canadian banking is undeniably powerful, bringing a host of clear and compelling benefits. At the top, enhanced security with unprecedented speed and accuracy, saving billions and providing peace of mind. It can democratize access to financial services by looking beyond traditional credit scores. Automation drives efficiency, ideally lowering costs and speeding service. But there are risks. Algorithmic bias from historical data can create discriminatory outcomes. Privacy concerns and potential data breaches demand top-tier governance and security. Accountability and explainability are essential to challenge decisions and correct errors. For artificial intelligence to be truly successful in banking, it must be trustworthy. People will not accept decisions made by a machine if they believe the process is unfair, secretive, biased. Embedding strong ethical principles into the design and deployment of AI is not optional, it is fundamental. Actively combat algorithmic bias. Proactively audit AI systems for hidden biases related to race, gender, geography, and other protected characteristics. Use diverse, representative data and continuously test outcomes against fairness metrics. Transparency is the bedrock of trust. Be clear about how AI is used. Provide understandable reasons for outcomes and maintain explainable AI. Ensure customers can appeal and request human review. Guard data with stringent governance and state-of-the-art cybersecurity. Be explicit about what data is collected, how it is used, and for how long it's stored. Build a culture of responsibility with clear accountability and ethics review, collaborating with regulators, academics, and public interest groups. Fairness is not a feature to add later. It must be a core design principle from the start. The conversation around AI and automation often sparks fear about widespread job losses, and it's a valid concern. AI will automate many routine, repetitive tasks currently performed by people. Manual data entry, simple transaction processing, answering basic customer queries. To pretend otherwise would be dishonest. But the story isn't simple replacement, it's job transformation. The bank of the future will need different skills, not just fewer people. There will be growing demand for people who can work alongside AI systems. Data scientists, AI ethicists, machine learning engineers, and AI translators. As chatbots handle routine inquiries, human customer service becomes more important. People will seek empathetic, knowledgeable human beings for complex situations. Invest in training and reskilling across critical thinking, communication, empathy, and creativity. Banks, governments, and educators must help the workforce adapt. We began with a stark reality. Hundreds of millions of dollars are lost to financial fraud in Canada each year, a threat that feels both immense and relentless. Yet AI is already acting as a tireless digital guardian, stopping theft, accelerating loan decisions, and making banks more efficient. The path forward is about harnessing this powerful tool responsibly to build a better, safer, fairer financial future for all Canadians. Banks must invest in AI with ethics at the core. Regulators must set clear rules against bias, privacy violations, and opaque decisions. Educators and governments must prepare the workforce through training and reskilling. The benefits, from enhanced security to greater inclusion, are too significant to ignore, but only realized if we manage risks together. By working together, we can ensure AI is deployed not just to protect profits, but to protect people, making Canada technologically advanced and profoundly human.